Sorry. So this is basically how you create a back test. And I'm just going to show this off real quick. This is the test we looked at this morning. So this is going back to SPX dailies, which is when you could do 5 days a week expiration back in 2022. And what this is a strategy that we were looking at. I'm going to show you how to back test this and then automate it. So this is a put spread. And basically what it is, you're selling a put, a 45 delta put, 1 DTE, and you're buying a put 10 points below that, 10 points below that 45 delta. And we're starting out with a small account. So we're doing $5,000, and it says 100%, but we're actually limiting it to 1 contract per trade. So it doesn't matter how much your percentage is. We're only going to ever do 1 contract. We're going to skip days where Mr. Powell is talking. And so we're going to do this trade on Mondays, Tuesdays, Thursdays, Fridays. And here's the criteria to put this trade on. We open up just even 1 cent up. We consider that an entry criteria. And we've moved up intraday 0.2%. Does that make sense so far?
Yeah, you're trying to make sure it's some kind of an update.
Yeah. Yeah. And so those are the criteria. You can go through it and you can say, as you can see, like all sorts of indicators. You could say, I only want to do this when there's a min or max RSI or an SMA or an EMA. We're not using that for this test. There's no profit target. There's no stop loss, although you could do that. And you could go as complex to say, I want to take profit actions at different times. If I have 4 contracts on, I want to take one off at 10% profit, another one off at 25% profit. So you could test that. And you can also exit with various things. So you could get out at a certain time a day. You could use the VIX. If the VIX does something intraday, you could get out. You can use technical indicators. You can use the underlying price movements. You could say if we move up or move down 10 points, I want to get out. Or if we move in relation to my shorts, I want to get out. You could use delta, and then like Dan showed on that other test, you can use the short-long ratio to get out. And you can we call this the Punisher section. You basically can apply your commissions to make it more realistic. So for this, I'm doing $1.78 opening fees and commissions and 78 cents closing fees and commissions. So we're going to run this real quick, but just to show you, let's just run it the last 30 days. So you can see it's pretty fast. It's a pretty fast back test, and running it back 3 years or 3.5, right about 3 years now, takes about 45 seconds, but a lot of times it doesn't. Yeah. It just depends on what you're putting in, what we're having to test and things like that. But so this trade is pretty cool. I mean, it's worked pretty well. What we give you is we'll give you the P&L of what it would have been, the CAGR, the MAR ratio, what MAR ratio is basically is your CAGR divided by your drawdown. So that's a quick way to say you could make $1 million on this, but if your drawdown's 80%, your MAR is not going to be, as high.
Yeah.
And so MAR is basically the higher the MAR, the better. And you only would have put it on in 3 years 141 times. I mean, that's how many times basically we have opened up and we've moved up, 0.2%.
It's almost like it's trying to assure it's going to be an up day for the most part.
That's right.
Doing the
That's
best
right.
I can. Yeah.
That's right. And so basically, I'm going to show you, I've already saved this. So I've saved it already. And basically, if you have automation, if you signed up for automation, I already have automated this. I'm not going to click the button, but I'll show you what it basically does. It's as easy at this point to say, I have this back test. I've researched. I like this trade a lot. I want to automate it. So what you could do is you could say, new strategy. You'd click is active if you want the strategy to be active. You click your brokerage account. You can have multiple brokerages account through this. You can have multiple sub accounts in the same brokerage. There's different ways you want to do it. Um, and it's going to pull in all the data from the back test for you. You're going to we don't put how many contracts because you might test a certain allocation but want to trade a different allocation. So we leave that blank. So we'd say we just one. And we have entry and exit criteria. So we basically say start out at 5 cents increments, since this is SPX, and try to get this filled every 5 seconds for a max attempt of 10 times. And so that's a way of limiting how much slippage you're going to get or you're willing to have on a trade like this before it gets filled. And so once you did that, and there's a lot in this, so I'm not going through everything. Obviously, you can research it and see tons of videos we have on this, but that's the criteria for this test. So you hit save, and I'll show you real quick in mine some strategies I have. We're not going to go into the strategies, but what it would look like once it's traded. So these are the strategies I have on right now. Side note, double calendars have been really good this week. So this is my strategies I have on right now. And once they're on, we open it up for you. We tell you basically the strategy name, your P&L percentage, when it opened, the opening price of the underlying, what your initial debit or credit is, and what the current price of the options are. And then when we close it, like what Dan was saying, it closes for you with that same information, and it'll give you the closing costs and then the reason for the close. And you're setting the reasons for the close in the back test ahead of time, so you have the control over that, right? We're just obeying your rules that you've set up, basically. Does that make sense at all, Dan? Any questions about
Yeah.
any of
And
that?
Troy, could you show them where, what if somebody, show them some of the buttons that let people know they're still in control. In other words, if something crazy came out in the market and you didn't want to trade something, or that it's not like this diabolical computer has taken over the world, show them some
Yeah,
of the buttons that you can pause or
yeah.
those types.
So these are all my trades for today. I'm not going to go through all of them because they're good.
Yeah.
My secret sauce, as I say. But we'll show you all the trades that you could open for the day. But let's say we wanted to, pause one of them. Two things. A, you could do it ahead of time. So you could say, here's my strategies I have. They're all active, but you'll see this one is paused. I don't want to trade this right now. Well, what you do is if you want to unpause it, you could resume opening trades. Or if for instance, the bond auction at say you have a 1:30 p.m. condor that you're going to put on, then you look at your trades for today and say, I don't want to do that. It's as simple as basically just going in and pause opening trades. And we're not going to open that strategy for you. Similarly, if you were at this right now and you say, I don't want to follow the back test, I like my profit, I'm going to get out. You could do two things. You could close the trade now, which we will try to close it for you right then, or you can click halt management. What halt management means basically is we're done with this. We're done managing it. It's still on. We haven't closed it, but you can return to your broker and do everything yourself at that point. And so it's a way basically of having the control to where once it's put on, you're not like, oh my gosh, I have no ability to do anything with this,
Yeah.
So trying to look at the chat here.
Yeah. Hey, Troy, one thing is you're looking at the chat, Kevin, maybe you could read Kevin's question, but I just want to, people, if you're seeing like Troy has 9 trades, I just want to make it clear on the 9 or 10 trades, how many caught that these 9 trades aren't all going on every day, right? These
Yeah.
trades might, you know, go on just on Tuesdays or just on Mondays because they tested that way. And they may be off in 2 or 3 days before something else on. So you're not like 400 trades on at one time, right? So it's
No.
just and I just want to make sure everybody uh, uh,
Yeah. No.
sees
So
that.
you two things real quick. So one, it's all up to you. I mean, basically, if you want to put 100, we allow the trading tier that we have is 100 opening executions a day. So what that means is basically like, well, you can open up 100 strategies a day. That doesn't mean contracts. Each strategy could be a million contracts for all we care. It doesn't matter the contract size. You can open up basically 100 executions a day, and so it's not limited to that. My personally, how I trade is I trade certain trades certain days of the week, and so you can see through mine, like I put on, I opened this last Wednesday. So this has been on a week. I opened this last Friday. I opened this Monday. I opened this Monday. I opened these two yesterday. I opened this morning. And so, you're just, that's my style of trading, but it's up to you. If you trade 0 day stuff and you're opening trades all day, yeah, it doesn't matter to me. You could have 50 trades on at any given time. You could have 10,000 trades on at any given time. It's just well, not really, actually. You could have like 1,000 trades on, because if you're opening them up at different days of the week, you can do 100 a day, if that makes sense. I'll go through the questions real quick. Is the automation able to do complex strategies like the will strategy? We don't do the will strategy because it's just options. So we don't do stock. We won't purchase stock in this for you, if that makes sense. It's just options trading. Are there template strategies based on existing back tests, an 8-10 SPX calendar with 10% profit and 15% max loss? Not exactly, but there are templates to start out with. So when you go to new back test here, we'll pull in whatever the last test is, but let's say you wanted to select a common strategy. Well, you can look at a butterfly. We'll fill in a template of like, here's a calendar, here's a double calendar, and that at least gets you going. We don't do profit loss. That's for you to come up with, but you can do iron condor,
That's
iron
helpful. Yeah.
iron fly, jade lizard. You see all of these ratio spreads. So we have quite a few, and then you can adjust it and test from there. So if you want to get started and you're just learning options, you learn the name of something. You say, well, I want to sell a condor. We give you kind of just as a template a 10-day condor, a 16 delta, 10 delta, and you can run that. And you can see, I mean, just for the sake of it, let's revert some of this, revert out all our exit criteria from the thing. So now we just have a condor that's set it and forget it. Run year to date, or actually the last 30 days. So you would have been a winner that time, and then you can go back and you say, what about the last 90 days? Okay, well, that's the beauty of testing. What I thought was a great trade the last 7 times isn't a great trade the last 24 times. And so you can go from there. They do show up in TOS. So basically how this works is I keep my brokerage open throughout the day, because we're not saying like, hey, don't ever open your brokerage. Like all the trades basically you'll hear your brokerage ding when the trade goes on. It's just we're opening them for them and closing them for you, but they're in there. And basically, if you did something in your brokerage where you try to adjust the trade, we'll halt the management automatically to be like, hey, we see that you're interacting with this trade, so we're halting our management. You're in control now, so adjust accordingly. Which brokers do we support? Tasty, Tradier, and Schwab, TOS right now. And then, there's always more in the hopper, but those are the ones we do right now. The monthly cost, I'll show you here in a second because I have a link for you. Can you connect Tasty and place a trade directly from Option Omega? Exactly. Yeah, you can. That's what I do. So I have my brokerage open and it's just placing trades for me.
Yeah, what I like about that, once you learn the trades that I'm doing here, I have a Tasty account, even though I do more stuff through Schwab. I'm not even in seeing Tasty. I'm just writing Options Omega does the test, so I don't have to learn a new platform theoretically.
That's exactly right. Are there tutorials on how to use the automated trading? Putting that there. That's the documentation website Dan talked about. And we also have a video course. When you sign up, we give you the link to that video course of We call it automation boot camp. Are you planning to have an analyzed graph? Well, you've heard it here first amongst friends. We are planning to have that. We are in progress of that. So, but we had to
Yeah.
get automation launched first. So, any other questions? One thing I was going to show you real quick is, let's do this first thing that I started with, this little credit spread. What happens if you have a lot of trades on and there's a strike conflict because you already have a trade on? Well,
Oh
there's
yeah,
two.
yeah.
By default, we're not going to put the trade on, right? So we're not going to conflict strikes for you. We don't want to do that. We want to make life easier for you. But one thing you can do if you really want to put the trade on is you can hit this toggle, move conflicted strikes. And what that means is if any strikes are conflicted, option maker will normally skip the trade and alert the user. But hitting this option will allow the platform to move any conflicted strikes to the nearest available strikes based upon the strike selection criteria. If you're using the green padlock, then the offset strikes will move in tandem. What that means basically is this button right here, exact strike offset. It's only going to open this trade. If I click that, it's only going to open this trade if there's a long strike that's exactly 10 points below my delta. If I unclick that, it means I'm willing to go 15 points. I'm willing to go 20 points. I'm willing to go. Now, in SPX, most of the time it's going to be 5 strikes, right? Especially with 1 DTE. But if you were doing 60 DTE or 90 DTE, there's no promise that you're going to have a 10 strike below that. And so move conflicted strikes basically means I still want to put this trade on, but I'm willing to move the strikes in tandem to avoid a conflict, if that makes sense.
Yeah.
Okay. We do. We have a list of criteria. Basically, that documentation website gives you everything for backtesting and automation. And there's a lot to it. And even once you do that, there's actually what we call CSV testing, an advanced feature where you can test your own indicators. And that's a little bit more complicated. But basically, like if the criteria we have doesn't match how you trade, you could still backtest by importing us basically dates and times that you want us to open trades at, or even specific strikes you want us to open. So there's ways to do that. If you does it give an alert for conflicting strikes to confirm if we want to move it or just automatically moves? If you unstrike that, if you untoggle that, move conflicting strikes, it's going to send an alert to you. We have email alerts as well and say, we tried to put this trade on, but you have conflicting strikes, so we're not going to put that trade on. If you hit that toggle, we're just automatically going to move it for you. So basically, you set it ahead of time.
That's a great feature. Yeah.
I'm going to real quick. Give me 1 second. Sorry. Give you a link. Because Dan gets a discount, and because of Dan, you guys get a discount. So, but I've got to learn how to spell first. That's my big. That's my big.
Yeah. And one thing is Troy's doing that. I'll just mention, you all know, most of you know my computer and technological capabilities, and it's not bad. I've enjoyed it. I mean, learning the tool, and I like the ease of the automation, and on some of the trades, it's been helpful. But again, I like where I'm comfortable using it is mainly because the risk management features there that, how we would get out of trades when things get too in the money, when the deltas get to a certain point, when the premium comes out. I like those. And that's, in their risk management isn't going to be as distracted as Dan is at times.
I
I appreciate that.
He asked a great question. So it seems too good to be true. Well, we're not giving you strategies. So I want to be real clear about that. This is a research tool. So
Yes,
there 100%, there are trades that test well, and then they stop testing well. They stop trading well because that's just real life. There's seasons where double calendars do great, and there's seasons where they don't. The nice thing about the tool is that we will show you if it's a bad trade. And we try to punish things up front to make it really realistic. So if that answers the question, how, and then it does back testing and also automation. If you sign up for automation, you can also just sign up for back testing. We have that as well. And then the automation is, yeah, it places your trades that you want to automate, and then it gets out automatically as well. And then if you, that link, basically I put in there, Sheridan Risk Management people get 50% off their first year, the first 12 months. And so, and you can do monthly or annual. So that link should help you out if you want to sign up. But yeah, it's not there is no get rich quick scheme. I mean, this is just a research tool, and it's helped us, me personally, try to not be as emotional about it. Say, I've got 2,000 instances of this test running and it working well. So I'm going to stay small. I'm going to be really conservative with allocation. And then I'm just going to not care if it loses, because it shows me that it can lose, but over time it wins. So,
and I like this as a involved in risk management and teaching. I think it's a good tool to enhance your learning, because you can see, to be able to look at real quick as you're testing these things, you can look back and you saw how quick it was. In 3 years, you can do, and it says 45 seconds, but it's never taken me 45 seconds. It's probably been 15 to 20 seconds. So I just think it enhances the learning curve dramatically, because you can kind of see these things. And uh, I don't see any tool out there that's close to it from the back testing. And now I just liked with the automation, it's just pretty easy. I mean, once you know the back tester, it's not like, okay, now I've got to learn this whole how to make it live. They've made it pretty seamless to go from the back tester to the automation. Um, any other questions, anybody? Again, Troy or Matt or Rusty will be on again in the future. If you have any questions for Troy, Troy, you want to put where you or Matt or somebody, if anybody had any questions.
yeah, if you just go to optionomega.com, we have a Discord link at the
Oh
top.
yeah,
You,
yeah,
you can click, and we're in Discord all day. So you can get on Discord if you want.
yeah.
Uh,
You see Hal's question?
yeah. Let me tell you what. Let me share my screen one more time.
Hal said, I'll just read it while Troy's bringing up something. He says, will it show when a strategy stops performing well? Like good for the first 6 months and then it declined. Um,
So this is the perfect example of what we just did. This is can you see my screen?
yes.
This is a short-term version of that, just to show it off real quick. But basically, if you said, I've got this 16 delta put, 10 delta call, iron condor that's 10 point wide, and it's a 10-day condor. I'm going to run this the last 30 days. Whoa, I'm a genius. I'm going to be a billionaire. This is all I should do with my money all the time.
Yeah,
Okay,
100%. Yeah, percentage win. Yeah.
let's go back 90 days instead of just 30 days. Oh boy, that's not a good, it's no longer a good trade. So I'm not going to trade that. And I'll show you just one more real quick for that, because I think this is a reverse iron condor. And this is a good version of this, because basically you can see the summary of how, and linear is good too. Basically, the summary is, we've had drawdowns. You definitely have had drawdowns, but you really almost had the largest drawdown you've ever had in this strategy starting in April. And so this is how you would look at it, is you say, well, okay, in fact, we'll just to test it. So pay attention to the numbers here. This is run through June 4th. It's a 1.5 MAR. Okay. So let's instead of going to June, let's end it the end of March and see what it would have done. Remember, 1.5 MAR if we include that big drawdown, and see what it would do once it, if we take away those bad dates, if we take away the drawdown date, what would have happened for that? And this is a SPY reverse iron condor. Well, it looks a lot better, right? Um, and so you can see through time how these tests are doing, because you can see the drawdown, and you can then adjust personally. Okay, that drawdown is larger than I wanted for this type of trade, so something's happening to this trade, and until it starts performing well again, I'm just going to pause it, or I'm going to abandon this trade. There's lots of trades that look like geniuses in 2022, and now you would be broke. So that's how any trading strategy works.
Well, and
Um,
it also, I mean, here's the thing, Hell or anybody else, when you think about it, any of these trades, if something doesn't go well for a month, what's the first? There's always only two answers to where the problem is. If you want to go back and see what happened on any of these strategies, what are the two things? How do you lose money? There's only two on any of these range bound. Hell, what would they be, or anybody else? There's only two sources to look. So if there's a 2 month period where a strategy you're doing starts losing, the answer is always going to be two places. A, look at the price. What was the price movement through that period? But number two, what was the volatility levels? That's it, right? So you say, how will I figure it out? There's only two places to look, right? Right. And then you could, if you want to look zero in on maybe there were a couple days that were just crazy. Okay, then you could maybe look and see, was I trading a range bound trade the day before, a 10-day range bound trade the day before the FOMC meeting? Okay, so what I'm saying is, by looking at price, vol, and news, you could go back if you needed to tweak it a little bit, right? On
yeah,
on that type of thing. So it's anyways, Troy,
Marie,
any
I
yeah.
don't want to spam the chat. If you scroll up, I posted the link. So he's saying, can anyone see the link to sign up?
Yeah, if you
It's just
scroll, yeah, Ranjit, if you scroll up, there should be the link. Has anybody clicked on the link? Are they able to do that? Okay. Um, and then I think there was one question. Hal says, uh, sorry, but what is Mar? Now, I grew up in Chicago, Hal. Mars, anybody grew up in Chicago? I think we had what's the candy factory that we have in Chicago? I think it's Mars. They had the Mars uh, plant or something in Chicago. But Troy, what is Mars in relation to options?
MAR is basically, um, oh, I am. I'm just posting it. So smart. You guys are much smarter
No,
than
you
me.
know
I'm
what? I
like,
do that all the time, Troy.
I
So I
posted it.
forget.
I just keep posting it to Dan over and over again.
Okay, so
There you
there it
go,
is,
guys.
folks. Yeah, there it is to everyone. Thank you for uh, Mike. Yeah, I do that too. Yeah, that's the one
Yeah.
trick I wish I've got to fix that on Zoom that it goes to unless we click. So there is the official link, folks, where it says Troy to everyone. And Troy, what were you saying about Mar?
MAR is basically your CAGR, your compound annual growth rate divided by your drawdown. And so you can have a really high CAGR, like 1,000%. And you're like, I'm going to be a billionaire. But if in the process of that trade you have a 90% drawdown, your MAR is going to be low. And so basically, a way to look at that real quick is to say the higher the MAR, the better. And for our, I can tell you personally, a one MAR is the minimum starting point for me to even consider a trade. A two MAR, depending on risk and things like that, I'm good with that. Anything above three, I'm like, okay, this is a good trade. And
And the
then
main thing, yeah, the main thing, Troy, right? Because if folks, let's be honest, if you have a big drawdown, how many of you would say, if I have a big drawdown, it's going to be tougher to recover or psychologically want to keep doing it? And that's why the MAR is saying, basically, is the MAR saying that the drawdown is under control or it's manageable or it's livable, or how might you say it, Troy? With a high MAR, it's saying the drawdown is reasonable. Would that
Yeah,
be fair to say?
yeah, the drawdown's reasonable. And then the second part to that, and there's nuance in back testing, you learn this as you go, is I don't trust the MAR that, like we looked at that a while ago, 7 trades isn't enough data. And so the farther back in time you go, the harder it is to have a good trade that lasts the span of time. And so if you can get, for instance, like an MAR from 2013 above 1 is a really good trade. An MAR above 2, 2018 to 2025 is a really good trade. An MAR above 5 year to date might be a good
Yeah.
trade, but then just go back and keep testing it to see what it is. So
Well,
any
good.
other questions for me for a hop out?
Yeah. Anybody? Yeah, we appreciate Troy coming and sharing this. I'm excited about the tool and uh,
It's an honor to be on. Listen, I tell the story a lot. These young kids, married, sweet family, came to my church and said, we talk about what I do. I'm bivocational, so don't take a salary from the church. Said, what do you do for money? So I actually do options. And they said, oh, you might know my dad. I was like, oh, okay, who's your dad? And they said, Dan Sheridan. And I immediately pulled this Google Doc I had from like 7 years ago, 8 years ago, of all the courses I had taken from Dan Sheridan. So I consider Dan my mentor. You guys are in good company. He's been around a long time, and risk management's the key. So shout
yeah,
out to Sheridan Risk
yeah.
Management.
And I appreciate running into Troy because not only is he a very good pastor, he's become a good friend, and I'm glad I ran into him. And I just think the tool is helpful. And as I always say, I think the thing that makes uh, the option Omega better and more practical for at least how I look at it from risk management is Troy, Matt, and Rusty, all three of them are extremely active. And so it's not like Rusty's the main programmer. Would that be fair to say, Troy?
Yeah, yeah,
Yeah,
yeah,
he's the main programmer, but Rusty is extremely active trader. And so it's not like some programmer, I remember over the years I've talked to programmers at Toss trying to, this is a feature we'd like. You know, Rusty, Matt, and Troy are very active. So they're very up on, the risk management tools and stuff. So it's refreshing to see that because not all programmers are extremely active traders. So I'm thankful for that. All right. Any other questions? All right. Well, we'll see you next time. I'll let Troy go, and we'll be back at 2 Eastern in the afternoon today, folks. Have a nice day. Thanks so much, Troy. Appreciate it.
Thanks, guys. See you soon.
Thanks. All right. Thanks.